Alright traders, I'm back again. Here we're making another video for you, looking at the US dollar yen, the daily time frame. We're going to be looking for a short trade on the 4-hour time frame, but right now we're looking at the daily time frame because we're getting our market sentiment from here. And also there's some very important things I want to show you here. Now there's an important level that you look at here, and this is going to be this bottom of this daily Kumo here, and that's a strong level of support here. So we want to see the market break through this level and close below that before we take this short trade that we're looking at. The reason we're looking to go short is because we have a TK crossover here, which is bearish. You got a Kumo future twist, which is bearish. It's not quite all the way developed, but it's coming. It will certainly be developed once this price closes below this Kumo here. So that'll give us that second signal we need. And we have Chiku span below price, and it's a little bit away from the Kumo, so it has room to move and run here. Now we want price to get below the Kumo, and that'll be the final bearish sign and the most important bearish sign to tell us that the market truly is bearish. Now you have levels of support. Now when price was up here, the first level of support was going to be this your Tengen-sen right here. The second level of support is your Kijun-sen. The third level of support is your Kumo top, and the fourth level of support is your Kumo bottom. This is the final level of support, and if we break through that level, we can look to take a short trade. Now there's a couple things again that I still want to show you that are important. Like I said, this blue line here, keep notice of that. You'll see it again on the 4-hour time frame, and that's the level that we're going to be looking to break through. But we're going to put in some Fibonacci retracement levels here, and I want to show you what we're looking at with those. And those are very important. Okay, looking at these Fibonacci retracement levels, you see this 38.2 and this 50% retracement level. As you see, this 50% retracement level is right in line with this Kumo bottom here. So this is a strong level, which means this is a strong level of support, so the market could bounce here and go take off and go back up. Okay, so if it does that, then we don't have a trade and we'll have to wait and look for something later. So let's take those off of the chart. Remove these Fibonacci retracement levels. Keep notice of this blue line here. And let's go to the 4-hour time frame. Now we're on the 4-hour time frame here. And we have all bearish signals. Okay, now we could have gotten to the market. Let me show you one thing here. We could have gotten to the market after price closed below this support level right here. But we didn't get into that market because this was on a Friday. I didn't want to trade that on a Friday and wait over the weekend. And then you have this level here that we're coming up on, and we're not sure what's going to happen here. So we want to see that this level is violated and broken before we get into the short trade. Now you got all bearish signals. Like I said, you got your Chiku span below the Kumo and below price, which is a very strong signal. You got price below the Kumo, which is a very good signal. You got a Kumo twist, which is bearish right here. So you got all bearish signals with your TK cross, which is bearish right here. So this is telling us to go short. And what we'll be looking for, we'll look to close below this level, and we'll look to take profit at the next level of support. And let's see where that level is. Now my computer is slow, so it takes time to get to where I want it to be, so I can show you where the next level of support is. But once the market breaks below that blue line here, this blue line again is the daily Kumo bottom and the 50% retracement of this move right here. So that's an important move right there for us. So what we want to go down to is we're going to take it to this average true range. This is a weekly average true range, okay? So it's 78.757, and that's the range, that's the area that we'll look to take profit, okay? Now, where would I put my stop loss? You're probably asking that. So we'll break here, we'll look to take profit here, and we'll look to put our stop loss. If we break here, we want to put our stop loss above this candle here, because this is a support level. This is going to be a resistance level now. Once the market comes down here and goes above this level will even be a support, a resistance level, because right now it's a support level. When it breaks that level, remember that's the daily Kumo, so it'll be a resistance level, and price has to get above that. So we'll put a stop loss above this candle, because here's a 4-hour resistance level. It's support, and then it broke. This will be a little level right here. So we want to put our stop right here. Okay. And how much would that be? Just from here to there is roughly 35 pips. Okay. So you have to look at your money management and see how big, if that's too big of a stop loss for you. But you can't just put a stop loss anywhere. It has to be, I like to put technical stop losses based on where the market may go, and it would be back to another support or resistance level. So those are the levels where I usually put my stop loss. That's why I like to try to get as close as possible to a support or resistance level when I get into the trade. Now let's see if there's any other things we could look at on these markets. There's nothing here, but there is some things that I could show you here. Now you see these arrows here. These are going to be fractal levels. Now I have them on the chart so I can show you some things, but I usually don't put them on the chart because I know where the fractal levels are, because I used to trade the chaos theory, and that's how I got my name, chaos trader. And I didn't like using the alligator and all that, so I started to learn the Ichimoku system, and once I learned it, I kept using the fractal levels because I think they're important. I always see the market closing above it or below it and getting into the market like that. And I'll show you how I use those levels. And I probably showed you before, but I don't know if I had the fractals on here or not. But you could see basically what I'll look at now. If I want to go short, I have to get all my signals first from the Ichimoku system. So that'll tell me to go short. Now if I'm going to go short, I need to get below this level, this fractal level. This is going to be a support level. So when price comes down here, I'll have a line here, and I'll wait for price to close below that line. So you put your line right here below this, and then you wait for price to close below that, and you get into it, to the trade. Because when that happens, what will happen here, you'll have a bearish crossover. You'll have a bearish TK cross. You'll have a bearish twist, and Chiku span will be below price, and then price will be below the Kumo. Now on a Kumo breakout, it would be different. I'm not looking at any fractal levels or anything. I'm looking to break above this Kumo, because that's right here. This will be the resistance level, and when we break that, all signs should be bullish at that time, because you already have a bullish crossover. The Chiku spans above price, so that's bullish. You wait for this twist here, this Kumo twist, your future to become bullish. Now a lot of times if you take the trade before the twist becomes bullish, what happens is price breaks above the Kumo cloud, and then it retraces back, and then it goes, and then by then you have all bullish signs, so you could get into the trade on the pullback. Let's go to this Euro Aussie. As you see, I boxed the market in almost like the Darvis theory, but I have the market boxed in because I'm boxing it in on the highs and lows. So this is the fractal high, or high level that you want to look at, and this is the fractal low level. Now what I'll do, you could get in on the break of this Kumo here. This was a Friday, as I said, though, so I didn't get into the trade, because you have all bearish signs. Well, you still don't have this crossover yet, this Kumo twist. So the market will retrace, and then if the market breaks this level, if the market retraces on the next candle, goes up and then comes back down and breaks this level here that it's making, which is going to be a fractal level, all your signs will be bearish. You'll have a bearish Kumo twist, you'll have bearish TK cross, you'll have a bearish Chiku span below Kumo and below price, and you'll have price already below Kumo. So this is going to develop into a fractal if it closes here and then you have another candle close above it. And then you'll look for the price to come below this level. So this will be a fractal level that you trade and break. Once it breaks that level and closes below that level, you get into a short trade and you ride it to this fractal level because this is now support. And you wait to see if the market could close below that level, and then you continue to go on. Now if you were going long, now the market's here and it continues to go up and up. If you don't get in on a Kumo breakout, you wait to break this fractal level, and then you ride it to this support level, resistance level, these fractal resistance levels, and then you see if you break that level and you continue to go. And you do that all the time with all the trades that you do. As you see, it's the same thing here. This is the one that we're waiting to look and get into, the USD yen. This Aussie USD, this is another one. I have the market boxed in. Once it starts kind of ranging, I box it in, and then I look for it to get out. Now, Friday it broke out of this level, it broke above this fractal level here. We didn't get into the trade. It was Friday. We look for the market to pull back. There's levels it could pull back to. This level of support now, so it could pull back to this level only and then take off. That's not much of a pullback. It could pull back to this Tenkin right here. It could pull back to the Kijun right here. So you wait and see, and then if it breaks this level again, then you get into the trade. Okay? But now see, the level that you're going to look to break now is this next high right here. So if the market goes down and then comes back up, it'll develop a fractal here, and it's a high level here, your prior swing high, and you want to break that level and take that level, and that's how you trade it. Now if it comes down and the market comes through here and comes down, all your signals will be bullish by time all your signals will be bearish by the time the market gets down to here and breaks this very strong support level. As you see, all these levels getting hit right here on this level. So this would be a strong support level, and if the market broke that level and closed below it, we would try to go short. We're looking at the Swiss franc yen here on the 4-hour time frame. I have this market boxed in again. Now we're going to look. We have all bearish signals except your twist is bullish still. Your Kumo future is bullish, but it's developing into a bearish frame. Okay, so if you have that happen, by the time that does happen, price will be below this level and closing below this level. It'll be below the Kumo and close below the Kumo. If it closes below that Kumo, we could get into the trade because we have a Kumo breakout with all bullish, with all bearish signals. Okay, your twist will be bearish. You have a TK crossover, which is bearish. Price is below the Kumo, bearish, and your Chiku span below price, bearish. But it's inside of the Kumo. But you like to see that Chiku span get below the Kumo. But the most important thing is that price is below the Kumo. We don't want to do anything while price is inside the Kumo because that's turbulence. Okay, so here we go again. I have this market boxed in. Right now we have conflicting signals. Basically everything is bearish except, well actually you're bullish here and you're bullish on price because you're above the Kumo. But you're bearish on your Chiku span being below price. But now it's inside that price realm. So this means consolidation. Okay, so it looks like the market is in a little rangy consolidated period. Okay, so now what you're going to look for are two things. You're not going to once it breaks this level, you're not going to be looking to go short because you don't have all your signals. Now aggressive trader could take this short once it breaks this level and ride it to this level possibly. But what we'll do is be more we'll look for a stronger trade and wait for the price to close below this level, because when that happens, you have Chiku span below the price, you have a bearish Kumo twist, and you'll have a bearish TK cross, and price will be below the Kumo, and that'll be bearish. But the way the market is here, you want to look for the bullish sign now and look for it to break this level. So see these fractal levels, which are your prior highs, making support up here, rather resistance, because you're coming up. So you want to look for the market to break this level, close above this level, and to get into the trade. The Ichimoku is just telling you which way to go, and you're looking for certain signals for it to tell you that you're okay to go. Now once price comes up to this level and closes above this level, everything will be bullish for us. You have your Chico span will be above the price realm. Price is above the Kumo. You have a bullish TK cross already, and your Kumo future will be bullish. So it'll be good to get into this trade once it breaks this level. Okay, but a lot of times it could break this level, move up, and come back and retrace to this level again, and then go. Okay, so if you missed that trade, you could wait for it to retrace. Now, a lot of times it'll go up to a level, and then when it retraces, it only retraces not all the way to this support level, which it will be when it comes and breaks through there, but it retraces to a level of where these wicks are. So it may retrace to like this level. And sometimes it doesn't come all the way back down. Okay, so that's what we'll be looking at there. Now here's another one. Looks almost like the dollar yen. This is the euro yen. Pretty much the same thing. I have the market boxed in, as you see, and now you're waiting for it to close below this level here. And when it closes below this level, we'll get into the trade. Okay, and then we'll write it down to this level here, because this is the next level of support, and that's where we'll look to take profit. Now you'll have a crossover here with your Kumo twist will be bearish, so you'll have that Kumo twist bearish. Price will be below the Kumo, which will be bearish. Chiku span is going to be below your price round, which will be bearish, and you'll have a bearish TK cross already. Now you like to see Chiku span get outside of this Kumo here, but still being below price is one of the main things that you want the Chiku span to be. That tells you that the market is moving. Let's look at the US dollar, Swiss franc. And there's not much here. I don't like the way this chart looks. Now what I could do, see this level here, this is the previous low where the market came down, and then it's retracing. Once it breaks its own retracement level, that's where you get into the trade. It made a fractal because you had the market go up. You have these candles on the side of this fractal here. So you just trade these fractal levels, okay? Now if the market was going up like here, if the market would have went up, instead of this candle being short, being a red candle, if it was a green candle and was going long, you would look to break this level and get into the trade, because all your signals would have been bullish by the time the market got there. Okay, just showing you some instances. Now this right here, a lot of times I see a Kumo breakout right here like this, and you see how this is rounded off like this, and then you have this flat top here. What happens? The market goes up, comes down, retraces back to this top, and then goes again. Okay, so now if the market goes up, retraces down to this level, bounces, and then goes up, we'll like to see it break this level here and then get into the trade. But we can't call this a level yet because we don't have the close of these candles, and we haven't made a high yet where the market went up, made the high, then pulled back. So all you really do is trade these highs and lows. They're also fractal levels. Even if you don't have the fractal level written in there, you could take it out. You could take this fractals out and use your own, just knowing where the market highs and lows are. Okay, so let's get into, let's see, that's it. Basically, that's all I'm going to show you. But hopefully I'm helping somebody. If there's anything you don't understand, just let me know and we could go over it and I'll talk about it. But right now, traders, the most important one that I'm looking at right now is that US dollar yen. We want to see it close below that level there. Remember that level. That's 80.089. So when the market closes below that level, I'll look to get into the trade and take that level short all the way to the level that I had mentioned before. Okay, traders, I'm done. I'll be back with some more videos later. If there's anything you want to know or talk about, just let me know, traders, and I will talk about it and discuss it as far as the Ichimoku system. And hopefully I'm helping somebody. Hopefully I'm a blessing to somebody. So traders, till next time, we'll close out and say, as usual, as always, God bless. So long.